what we're going to do as we go through the material and I explain how Medicare works, we're going to build a house, so to speak. It's kind of a metaphor that's overused, but it works really well for this. So forgive that. Um, we got to have the foundation. We got to have the roof and walls. We got to have the locks, the alarm system, things like that. We'll go through that systematically. Let's start with foundation, which is part A and part B. So to get that foundation, you got to enroll in it, right? So the very first step that anyone needs to take with Medicare is enrolling in Part A and Part B. Now, the timing of it we'll talk about, but the enrollment steps, that's really where things get going. Part A and Part B combined is also called Original Medicare because that's what the program was when it started in the mid-late 1960s. Part A and Part B was really all that was out there. It used to be enough coverage. It is no longer enough. So Part A is hospital or inpatient coverage. I like to think of it as the room and board in a hospital. That's Part A. Part B is doctor or outpatient coverage. So your regular doctor's office visits, blood tests, x-rays, lab work, the services of doctors in a hospital, outpatient procedures, and things like chemotherapy or IV drugs that a medical professional has to give you, stuff that you don't take yourself. So Part A and Part B, when you combine them, that's like your old school major medical coverage, right? Like I said, it's a good foundation. The monthly costs for these it's paid to the government. Part A, most likely for you, is going to be $0 per month. That is if you or your spouse have worked and paid Medicare taxes for at least 10 years, and everyone's got to pay Medicare taxes. It comes out automatically out of every paycheck. So that's most likely you, $0 a month for that coverage. Part B is not free, unfortunately. The base premium this year is $185 per month. It goes up 10-ish dollars a year, but that's this year's amount. If you are a high earner, then that is going to go up. You can talk to me one-on-one if that is you. We're talking 106,000 or more single, or 212 or more for married couples. When does this coverage start, or when can it start? So the earliest it can start is the first of your 65th birth month. So let's pretend I was born on today, August 6th, 1960. I'd be 65 years old today. My Medicare coverage could have started if I enrolled on time on August 1st. So I'd be just a couple of days into my Medicare coverage. If you were born on the first of a month, a rare situation, but I want to cover it, then it would be the first day of the month before. So if I'm born August 1st, it would start July 1st at the earliest. It's a little tidbit there. When to enroll. There are three scenarios that I usually see. We're going to go through all three of them. The first is the easy one, although it's rare. If you are currently getting Social Security retirement benefits before age 65, so that's not disability from Social Security, it's not supplemental security income, it is the retirement benefit that most people think when they think Social Security. If you're already getting that, you're going to be automatically enrolled into Part A and Part B. You're going to get an ID card, a Medicare ID card, probably around 3 months before your 65th birthday. And they're going to start taking that 185 for Part B out of your Social Security check. If for some reason you don't want to have this automatic enrollment happen to you, you can tell them to stop. But that is something you really need to be sure about if you're going to do that. Scenario 2, this is going to be more common. If you are not getting Social Security retirement before 65, then you need to manually enroll in Part A and Part B when it's your time to do so. I strongly recommend you do it online. The system is, credit where it's due. Usually the government isn't easy to deal with, but they've got this down. You sign up for a login.gov account, which is like your overarching Social Security, every other federal government system login. And from there, the enrollment application for Medicare will take maybe 5 minutes, if that. You can also do it over the phone or in person at your local Social Security office. You're going to need an appointment for either of those options. You can't just call, do it right then. You can't just walk in and do it at your local office anymore. And you can mail it in technically only reserve that for, I don't know, something weird happening where online's just not working. I've never run into that situation. I recommend doing this 3 months before your 65th birthday because that's the earliest you can do it. And it allows time for if there's a mishap or you need to, I don't know, get some documentation. It just allows some buffer. So do it 3 months before the coverage can start at the earliest opportunity if you do that. You're going to be billed for Part B when you do this for the first 3 months of coverage. So that 185 becomes 555. So a lot of people open that envelope up when they enroll. They're like, oh my God, what is this 555? They're just billing you for one quarter. You got to pay that. Once that's done, you can sign up for auto pay on a monthly basis if you prefer that. Scenario 3, this might be the majority of people on this call, but if you are covered by an employer health plan, that's either your employer or your spouse's, and they have 20 or more employees, then you have the option to either enroll in Medicare at 65 or delay Medicare enrollment until that coverage is lost, usually due to retirement of either you or your spouse, whoever gets the coverage. Most people who delay at least go ahead and get Part A because it's no cost and can't hurt. It becomes secondary coverage to the group coverage. But if you are contributing to an HSA or health savings account, my recommendation is to hold off on the whole thing if you do want to keep contributing to the HSA, because you're not allowed to when you're on any part of Medicare. So point is, if you've got group health insurance coverage and the company you get it from has 20 or more employees, you can delay coverage for Medicare, but doesn't always make sense to do that. To that point, I want to tell you a little story about one of my newest clients. Actually, we finished her enrollment up a couple of weeks ago. So funny enough, she is the HR manager of a huge automotive dealership here in the Atlanta area. So she knows this. She knows health insurance, right? She's in charge of the group plan. She doesn't know Medicare because that's not her day to day, and she's busy enough, right, with HR stuff. So their plan at the dealership is a Kaiser Permanente HMO plan. She's been happy with it. But the way that works is you got to use their doctors, their hospitals, which a lot of people are okay with. The cost was approaching $300 a month just for the coverage itself for her. And so she called me. She's a couple years older than 65. And she says, I think I may just want to go ahead and jump to Medicare. I'm still going to work. I could keep this group plan if I want, but, I've been happy with Kaiser, but she needed a specific procedure and she wanted to go out of the Kaiser network. She wanted to find, the best in the area who did that type of procedure. And Kaiser wouldn't allow her to do that if she stayed on the group plan. So between that and the cost going up and up, she said, maybe Medicare is the better deal for me. Can you help me figure that out? So yeah. So the network, or who can I see? That's easy. With Medicare, if you make the right plan decision for, this need, you can go to any US health provider that accepts Medicare, which is 98, 99% of them. So really no network restrictions. And the cost on a monthly basis was a little bit higher, or just for the coverage itself, and on an annual basis, of course, too. But when you factor in a worst case scenario, hitting the out-of-pocket maximum, which is the best way to get an apples to apples comparison, then Medicare actually comes out ahead. And touch over $2,000 per year is the projected savings if she were to hit her out-of-pocket max, which with the procedure she's having would be the case. So Medicare, my point is, if you can keep group coverage, great. Doesn't mean you should stay on it. Medicare can be cheaper and better. She's got more freedom of choice, lower cost exposure. It's a better plan, period. So do the diligence, make an intentional decision. Don't do what everyone else does and say, I'll just hang on to the group coverage until I retire and then worry about Medicare. Do not do that. Kind of related, but it's not a big deal. A lot of people make it a big deal, but let's cover it. The late enrollment penalty. This is kind of a fear-mongering thing that goes on in this industry, but basically the one to worry about is the Part B late enrollment penalty. So basically, if you were supposed to be enrolled in Part B, i.e., you did not have group health insurance coverage and you didn't enroll in Part B, they're going to pay an extra 10% of that 185 premium for each 12-month period. You should have had it, but you didn't. And you can't appeal that. You can't undo it. It doesn't draw down over time. It's permanent. If you're paying attention to this, you're doing any sort of research, and you haven't turned 65 yet, you're in the clear. It's pretty tough to have this happen if you're not paying attention, or if you are paying attention, excuse me. All right, so back to the coverage itself, Part A and Part B. What are you responsible for paying? For Part A, and I'm simplifying this, but these are the bigger points here. For Part A, every hospital stay you have where you're admitted, you're going to pay about a $1,700 deductible. Part B, you're going to have a deductible for that. The amount this year is $257. Goes up a little bit each year, but that's nothing. That's the smallest deductible I've ever seen on a health insurance plan for the most part. So no big deal. Coinsurance, this is the big deal. You're going to pay 20% of every dollar with no limit to that. So $20,000 procedure, that's $4,000 that you're responsible for. $100,000 series of bills associated with a hospital stay, 20%. So we want to do something about that. The other part to point out is something called excess charges. Basically what this means is if your doctor accepts Medicare, but does not accept something called Medicare assignment, which is basically the amount that Medicare says, hey, if you take Medicare, you're going to get paid X amount for this procedure from us. And that's what it is. If they don't accept that, they can charge you an extra 15%. That's what that is. So it's a good start. It's the foundation, Part A and Part B. Okay, let's build on it. It is not enough. How do we get the walls and the roof? That's the next piece. That's choosing either a Medicare supplement plan or a Medicare Advantage plan. This is what is billed as the biggest decision of this. And if you saw my posts on Facebook, I talked about this because this is what gets most people thinking about it, about Medicare in general. Here is how it works. So you can either go with a Medicare supplement on the left here. How that works is you keep original Medicare Part A and Part B. You add a Medicare supplement plan. It's also called Medigap. It means the same thing. And you add Part D, a Part D plan to get prescription drugs covered. So 4 components there. You are keeping the U.S. government as your health insurance company. That's who backs it financially, which is a good thing, I think. Advantage is the alternative. You trade in original Medicare to the company you choose an Advantage plan from. And basically what they are responsible for, A, they are going to handle all your claims, not the government. B, their plans need to cover at least the services of Part A and Part B. It has to cover the same stuff at least. Doesn't mean they pay for it as well or as much or at all, but they cover it. And these plans do include Part D prescription drug benefits as part of the medical plan. You have to buy them combined. There's some exceptions where you may not need Part D, like if you've got federal benefits or something, but most people, you got to get Part D with the medical of an Advantage plan. So a little more into detail here. With the supplement route, it is the more expensive route, but you get what you pay for. The monthly premium is going to be your Part B amount to the government, that $185, plus your supplement plan premium and your Part D plan premium, which depending on your zip code is $120 to $200. So most people fall in $300 to $350 a month would be the price. High earners, of course, you're going to pay more, but just to keep it level set, let's say $300 to $350. Coverage, you're going to have little to no out-of-pocket costs when you see a doctor or have a hospital visit. So that's really nice. As little as that $257 deductible. And we'll talk about that in depth in a minute. Network. Essentially, there is no network. You can go to any doctor any facility, any provider in the US that's contracted with Medicare, you do not need a referral. So I think it's 98.6 or 7% of all providers accept Medicare. Um, Really, the ones that you're going to find do not accept it are going to be smaller independent practices. So if your people are associated with a health system of any sort, then odds are good. Part D, you're going to choose a standalone prescription drug plan. So the supplement and the Part D you buy separately. You don't have to buy them from the same company. So it's a kind of a mix and match. Medicare Advantage, the biggest draw to Medicare Advantage is the cost for the coverage itself. Once you pay your 185 to the government, you can't get away from that. Your Advantage plan most likely will be $0 per month for the coverage itself. But you get what you pay for. You're going to have higher costs when you do use services. It's a pay-as-you-go type of thing. Co-pays, co-insurance, all the way to an out-of-pocket maximum. Networks, you are going to need to stick in a network. Advantage plans have networks, the ones that are sold today anyway. Probably something you're used to anyway, but the networks can be local or sometimes regional, not national. So you got to stay near home. And some do have out-of-network coverage, but the cost essentially doubles. It's just not worth it. The attitude is stick with the network. That's the best way to go about it. Part D, like I said, is typically included. So you want to factor that in based on your drugs. These plans, the other draw is the extra benefits. So dental and vision coverage, gym memberships, over-the-counter benefits. So like $50 every quarter for Band-Aids and Advil and whatnot. So a little too much is made of that, but it is real. So I do want to point it out. So side by side, supplement is the more expensive route, but you get ultimate flexibility and freedom of choice and very low out-of-pocket expenses when you do use medical services. Advantage, the advantage, pardon the pun, on a monthly basis, the coverage itself is less expensive. So we've got the roof and the walls on the foundation of Part A and Part B. It's shelter, it's solid, but not really a house you'd want to live in, to carry the metaphor a little bit farther. What we want to then address is the rarer but expensive and consequential events, like an intrusion in your home, if you will. Carrying that over to Medicare and health insurance in general really is major health events. And as we talk about Medicare, that includes like long-term care type of needs as well. So the first thing, the major medical event, is a cancer diagnosis or a heart attack or a stroke, the big three, right? If something is going to happen to us, it's going to be one of these three. It's even more so as we get older, of course. Want to stress that you will have expenses that Medicare doesn't pay for, and that health insurance doesn't pay for that matter, if one of these three things happens to you. Some good examples: experimental treatments or drugs, travel and lodging. So like if you want to go to MD Anderson for your cancer treatment, or Mayo Clinic, or somewhere across the country, they're not going to pay for you to get there, to stay there. They're not going to pay for your spouse or your family to stay with you, to take time off of work. Home care. So when you get home and you just need a little bit of help with everyday stuff, let's say you need to install some bars on your shower or in your toilet, that's not going to be paid for by Medicare. So even if you can afford to self-insure against this and pay for this kind of stuff out of pocket, for a very small amount per month, you can get a plan that pays a lump sum benefit of $15,000, $20,000, $30,000, $40,000 upon diagnosis. You do with the money whatever you want. So worthwhile coverage for sure. I have it on my family. It's too cheap to not have. The second big thing to look out for, especially with the Medicare discussion, skilled nursing and recovery care, home care. So skilled nursing, think of this as like your IVs and your physical therapy when you're recovering from a health event, an injury or an accident. And care at home is like the non-medical stuff, like bathing, dressing, getting around, getting fed. With skilled nursing, so the skilled medical help, IVs, physical therapy, the best case scenario is it's going to be covered for the first 100 days after your event happens. And it has to be after you've been in the hospital on an inpatient basis for at least 3 days. So a little bit of a bar to clear. Some serious things where you need skilled nursing, you're not going to be in the hospital for 3 days. So just be aware of that. It won't start to pay until after that. Custodial care, like I mentioned, bathing and dressing, help run the house is not covered at all. So you either need to plan to self-insure for that, or you can purchase separate coverage to offset those costs. I want to point out specifically on page 28 of the Medicare New Handbook from this year, it mentions the skilled nursing stuff. At the bottom of the page here, just talks about the hospital stay requirement, all those kinds of details. So with all that considered, if we want a complete house, a secure house, one that we'd want to live in, then this is what coverage looks like. So I'll focus there. I break it down into 3 levels because some people prefer more coverage, some people prefer less. That's totally fine. I'll focus on the highest level of coverage so we cover everything. So level 3 on the left here, you've got your Medicare plan with prescription coverage, either Advantage or Supplement, cancer, heart, and stroke coverage, dental, vision, and hearing, if that's important to you, not necessary, but it can be worth it if you use it, and recovery care. So recovery care is like the skilled nursing, long-term care type needs. That is your coverage. That is your decision to make. So we've got a complete house now, foundation, roof and walls, locks and alarm, good to go. This is how I think about planning for Medicare. It's not Supplement versus Advantage and we're done, because there are other exposures, other costs that are going to happen that you need to get some sort of plan for, whether self-insured or buying additional coverage. The earlier you get it is the cheapest it's ever going to be. And the value proposition gets a little less intriguing as you get older and older. All right. So that's kind of the big picture. We'll talk more in depth about the Medicare supplement option because that tends to be where I get the most questions, and Advantage is pretty simple from here. So the Medicare supplement option, going back into that small piece of this, here is the lineup of how it works with original Medicare. You've got your Part A, Part B. You add your supplement or Medigap plan to cover the expenses you'd otherwise be responsible for, and add a prescription drug plan because original Medicare doesn't include that. So Medicare supplements are sold by private insurance companies. A lot of the usual suspects, some companies you may have heard of but didn't know did Medicare, are in this market. There are several different types of Medicare supplement plans. They are labeled by letters, A through N. These days, the only ones to pay attention to are G and N. Don't worry, this is kind of an overwhelming chart. Don't worry about it. You'll see this. I wanted to identify it, but G and N are the only ones to pay attention to. So I made my own slide that's much easier to interpret. Plan G is the most comprehensive one that you can get now. It is the most popular one. The premium, highly dependent on your zip code. It's $120 to $200 a month for someone who is 65 or about that. With Plan G, pretty simple value proposition. All that you are left paying for is your Medicare Part B deductible as far as original Medicare charges go. So this year, that's $257. So hospital stay, knee replacement, something else expensive, $257. If you go to someone who takes Medicare and all the charges are approved by Medicare, $257. Pretty awesome. Plan N is much the same. It's like 95% the same thing, just to keep it in perspective here. A couple of changes. The reason you would entertain this is it's cheaper per month. 40, sometimes $50 cheaper per month than Plan G. Here's why. You're going to pay the Part B deductible, so no difference there between G and N, but you're going to have a copay of up to $20 per doctor visit, which I don't see as a big deal. A copay of up to $50 for an ER visit if you're not admitted to the hospital after that. It's just weird language they have on qualifications there, but $50 for an ER visit, no big deal. I'd love to have that if I had went to the ER, by the way. And then you would be responsible for Part B excess charges. Plan N does not cover those. And just a little bit of detail here. That sounds scary. It's very rare. It's like 2 to 3% of all Part B charges have excess charges with it, and it's mostly dermatologists. And if you ask the question, hey, do you guys accept Medicare assignment? And they say yes, then you don't have to worry about it. So Plan N, it's a couple little speed bumps, or you get a little bit more skin in the game, but you're saving money on the coverage itself. And like I said, 95% of the equation is the same, G to N. You get all the good things about a supplement, just a little bit more cost conscious. So some key points about Medicare supplements. The best time to enroll is 3 months before your birthday month. If you are going to enroll at age 65, some will allow you to enroll up to 6 months in advance. But I just say 3 because that's going to be the case for at least every carrier. The rates are going to be the cheapest they'll ever be. That's why to do it early. You can avoid mistakes or correct any mistakes if either you give wrong information or your Medicare number's wrong, something like that. And you just get it done. Line it all up so that it's put to bed, ready to go. You've got ID cards. When your coverage starts, you got nothing to worry about. Second key point, these are standardized plans. What I mean by that is the government designed them. So Plan N, they designed what Plan N covers. They designed what Plan G covers, and it has not changed since supplements rolled out decades ago. So what's great about that is that the coverage follows the letter of the plan, not the company that offers it. So Plan G from big insurance company A is the exact same product, the exact same thing as Plan G from medium size company B. It's the exact same thing. The difference is the rate you pay. That's it. So with that said, depending on your zip code, one company could be really competitive and another company that's really great where I am could be totally out to lunch. So that's why I've got a huge lineup of companies I have contracts with to sell their plans. So, I want to find the most competitive company in your zip code and go with that. We narrow the market down to who are the reputable companies, who are the financially sound companies, right? Who've been in the market a long time. Among those, who's got the most competitive rate. So the more options I have for you, the more I can help you. That brings me to a couple of points because I get questions about how I work, what's in it for me. The number one question I get is, how do I get paid? What is my fee? Short answer is there is no fee that I charge to my clients because I'm paid a commission if you purchase a plan through me as your broker. So that's how I am compensated. That's how I'm incentivized to keep you happy and keep you a client, is that I'm paid a commission for every year you're on coverage with a plan you purchase through me. And I'm not allowed to charge you a fee, in fact. So that keeps it nice and clean. So that leads to another question. Okay, so I must pay more. If the insurance company has to pay you a commission, they might charge me a higher price. They do not. So same price whether you go directly to the insurance company or buy it through me. And it's because they're going to have marketing expenses no matter what. So if you go direct, they're going to have an internal sales agent who sold you the thing. They're going to have advertisements. They're going to have brochures, pamphlets, whatever. Instead of paying commissions to me, they'll assign those costs internally and you pay the same price. And you get third-party support via a broker like me if you use me. So a little bonus to you. And then the next question is, okay, well, some companies might pay more than others. Are you biased towards one or the other? There might be $5, $10, $15 difference here or there between companies, but it is pretty much standardized across the industry. It's such a small amount that it's not enough for me to really do that mental sweat over. And two, I would rather you be happy with the plan you have so that you stay a client, because it's more profitable to me if you stay a client versus leave because I sold you something that, just wasn't the best thing for you. So not worth it to me to prefer one company over the other. I prefer that you're happy with who you're with and what you're paying. All right, so we got to talk about prescription drug coverage. This will apply whether you're going the supplement route or the Advantage route. Um, but because we're on the supplement route, we're going to tie this in. Remember, we stack it onto original Medicare and stack it onto a supplement. You do not have to buy your Part D plan from the same company that you buy the supplement from. All right. There is a late enrollment penalty associated with Part D. It's not a big deal, but let's cover it. It's a 1% penalty for every month you could have had Part D, but you did not have it. So I get this question a lot, like when someone doesn't take any medications and they're healthy, and that's awesome. But let's put something in place because they're inexpensive enough to where it's not really a big deal. And that could always change, of course, that you don't take prescription drugs. So let's just play it on the safe side. How do we choose a Part D plan? So again, this goes for Advantage or supplement. But basically, what's great about Medicare is they have a tool that allows you to enter your drugs, the dosages. Is it a brand, a generic? Is it a capsule, a tablet, an inhaler, a liquid, an injectable? All those details onto their online calculator, your preferred pharmacies where you live, and it will calculate what your drugs will cost under every Part D plan on the market. And then we sort by who's got the lowest total cost. And that's really it. So nice and simple. It's black and white. When you enroll at first, you get open enrollment, and then you can change every year in the fall if you want to or need to, because your prescriptions might change, the plans might change, and you get to do that once a year, no questions asked. So again, here's what original Medicare looks like if you add a supplement and a Part D to it. That's option one. Option two, Medicare Advantage. A lot simpler to explain given what we've already covered. But to reiterate, these are managed care plans. So like HMOs and PPOs, they're going to be networks to stick to. They're going to be referral requirements sometimes. There's going to be a prior authorization process for a lot of stuff, specifically the more expensive stuff. Again, these plans have to include at least what Part A and Part B do as far as covered services go. Does not mean they pay for it entirely, but that it is covered. And these plans are going to include Part D coverage. You're going to want to include it with the medical in most cases. You can't separate it out and buy a separate Part D plan with a Medicare Advantage plan. The premiums, again, as low as $0 per month. I have not seen a situation where it makes sense to go for a plan that has a premium associated with it, but that could change. And again, you got to pay that $185 for Part B. You can't get away from that. There are some plans that will advertise, hey, we'll give you back some of that. Yes, they are out there, but the benefits are like bare bones. Just fair warning there. And I do not recommend them. Coverage, you're going to have copays as you go for pretty much everything. Some plans do have deductibles that you have to meet before anything. They're going to be co-insurance, insurance payments, so like 30% for that MRI that you had. Out-of-pocket maximum. So all of that rolled up into one. Once it hits that number that you pay out of pocket, then you're done paying for covered stuff. But that limit is 6, 7, 8. We're getting close to $9,000 per year for these plans, which is why if you're going to go the Medicare Advantage route, one plan we haven't talked about yet is a standalone hospital indemnity plan. So if you land in the hospital, it's going to pay you A, to be admitted, and 2, for every day you're in the hospital to help offset those out-of-pocket costs. So that and cancer, heart attack, and stroke coverage is a real lifesaver with Advantage, because you can hit that out-of-pocket maximum very quickly. And let's say you get diagnosed in December, you meet your out-of-pocket maximum for this year, and then January hits, you're still getting treatments. Boom, you're going to hit that out-of-pocket maximum again in January. So just be aware of that. I do not recommend Advantage on its own. You got to have this extra coverage, hospital indemnity, cancer, heart attack, and stroke with it, in my opinion. How to choose an Advantage plan, like one company to the other, one plan with a company versus another within that same company, or different ones. Should come as no surprise by now. Zip code is the most important thing, because plans do vary by zip code, by county. What your friend on the other side of the country has probably isn't available. I'll say definitely isn't available to you. It's a different plan. It may have the same branding or whatever. Zip code dependent. Then we find who takes your doctors, who's got your doctors in network, who's got your preferred hospitals in network, the ones close to you, the one you'd prefer to go to if something bad happened. Very important. And we strip out the ones that don't have them in network. We just don't even consider them. And then we do the Part D analysis that we just talked about. Which plan that has my doctors that I'm happy with then gives me a great cost for my drugs. And that's kind of the criteria. The extra benefits like gym, dental, and vision coverage, over the counter allowances, I don't like making a decision or making a recommendation based on the freebies, so to speak. But it can move the needle if there are like 2 or 3 plans that are satisfactory with the other stuff. Then sure, that's great. But this is health insurance. Let's keep the main thing at the forefront here. When to sign up for an Advantage plan. This is similar to the supplement route. But if you're going to enroll at 65, do it 3 months before you turn 65. You do your A and B with the government. As soon as that is confirmed, go ahead and pick the plan, get it enrolled so that it is ready to start at the earliest opportunity. And every fall, you get the opportunity to change plans if you want, or stay with what you have if you prefer to stay with it. No health questions asked. So this is important because Advantage plans can and do change every year. The networks can change, the benefits can change. There could be one that comes on the market that is a better fit for you. So you want to monitor that. Supplements, what's nice about that is the benefits do not change. The price it'll tick up, but the benefits don't change. So you don't need to reevaluate it every year. All right, so back to this main comparison. If I had 30 seconds in an elevator with you to break down the difference. Original Medicare with a supplement, you pay more, you get more. It's the ultimate flexibility of choice, freedom of choice, and the lowest out-of-pocket exposure for medical expenses. But you get what you pay for. It is the more expensive route, I should say. Advantage, it's cheaper per month, but you're going to pay as you go up to an out-of-pocket maximum of $6,000, $7,000, $8,000, To be clear, I would still take an Advantage plan over a lot of other non-Medicare coverage. I'm not trying to poo-poo it, but in this world, there is an option that is even richer, and that is the original Medicare with the supplement. So again, the supplement versus Advantage thing, that's just the foundation and the roof and the walls. It's just basic shelter. Take a look at the complete coverage options to finish it out, to get proper protection with everything else, especially with the recovery care needs, the long-term care type of custodial needs, skilled nursing. That is the big thing that Medicare doesn't cover very well, that you need to be aware of. And if anyone's trying to sell you a Medicare plan and they don't bring this up, that's a dereliction of duty, in my opinion. You got to have a plan for that. Whether you're going to self-fund it or insure against it, you have to consider it and plan for it. So with one of these three choices, you're going to be in good shape comprehensively. It's just a matter of how comprehensive you want to get. All right. Want to touch very quickly on retirement. So, excuse me. This is a natural time to think about your investments, your savings, your 401ks. Excuse me. Sorry. I am not a financial guy, but I've got a network of people who are. They're very good at what they do. If you want help and you're not happy with who you're with, or you don't have anybody, but you'd like somebody, let me know. I can set you up with them. So, gosh, you'd think I'd learn how to drink water by now in life. All right. So your transition to Medicare, I see, is 3 phases. The first is education. You can cross that off. We're done. I don't want you to have to go down the rabbit hole on any more research. I don't want you to have to buy any books. If you've paid attention, you've got the most important stuff taken care of. Phase 2 is enrollment guidance. So one-on-one let's apply this to your situation and get an exact game plan for you. Strip out all the what ifs. Let's get it exact to your needs and your timing, your budget, your preferences, and specific to where you live, importantly, as well. And then phase three is once you're enrolled, if you use a broker like me, and of course, I'd prefer you to use me if you're going to go with a broker who does their job is going to give you support for claims, for billing, for as long as you've got a policy through them. The goal should be to insulate you from having to deal with an insurance company, if at all possible. Sometimes you got to be the one to do it, but good brokers who've got good connections and really do their job can intervene and save you a lot of strife there. And then also, they need to offer annual reviews to make sure, hey, if you just got a supplement in Part D, let's make sure that the Part D is right for you next year. Or if you got Advantage, let's look at the whole thing. Do we need to stay on this coverage? Do we need to go to a completely different policy? So that's what it looks like to me. Phase two is next for you because you've taken care of the education. There's really no use in getting an encyclopedic education before you apply it to yourself. You know enough, get it applied to yourself. If you would like to work with me, there's no cost for this, but it is limited to a handful per week. Strategy session, we'll spend 45 minutes on the phone together, or on a Zoom call actually, because we do this over Zoom, because I need to show you stuff and map it out as we go. I will fill out a roadmap for you with costs, exactly what to do, all the links, all the documents you might need to get filled out, where to get that done, how to do it, so that there is no guessing.